The military conflicts between Iran, the US, and Israel is far from coming to an end. In fact, the risk of escalation is getting worse. What can we expect? The oil price and the gold price. Hi, Leslie Khoo here. Now, let's look at the oil price. We do not expect Iran will kind of open up the Strait of Hormuz. No doubt it will monitor case by case. In fact, it has let some of the oil tankers of certain countries leave the strait. But the thing is, this is not enough. The pressure on oil price, or rather the pressure on oil supply, is still there. It's not going away. So I reckon the pressure on the oil price, therefore, will still be there. In fact, it's getting greater and greater. So in the next coming trading sessions, above $100 per barrel is still a norm. And based on the outlook of the interactions between Iran, the US, and Israel, things is not looking good in terms of the easing of oil supply and therefore the oil price. So the risk of the oil price hitting $120 per barrel is high, and the risk for the price to hit $130 per barrel is still there. It's going to get worse before it can get better. Now, let's look at the gold price. As I said earlier, the oil price risk is still high. And that means that oil buyers will continue to need US dollars for their oil purchase. And that will mean that they get the US dollars by selling the US dollar assets, for example, government bonds, as well as gold. That's why in the coming sessions, the downward pressure on gold price will continue. At this moment, at this juncture, given the current market conditions, the outlook of the conflicts between the three countries, when the gold price hit $5,000 per barrel, $5,000 per ounce, the selling pressure will come in. Some of them will take profit because the market expectations does not see it above the $5,000 per ounce. So I expect great selling pressure will come in when it reach near the $5,000 per ounce mark. And at this moment, I'm not saying that there's no demand for gold. There is still demand for gold. And when the gold price hit this region, the buying interest will come in. Because prior to the war, the various central banks have their own reasons buying gold. Because of this gold demand, the buying interest, when you hit this region, buyers will come in and prop up the gold price. So at this moment, I don't see it fall below $4,000 per ounce. In general, this is how I see the oil price and the gold price outlook in the coming sessions. That's all for this video. Thank you for watching. See you in the next one. Cheers.